All right, good afternoon, everyone. It is 12 o'clock on the dot. So we are going to get this webinar going, and people will be able to join as we go. So everyone's time is valuable. We want to treat it as such. I'm Michael Chesney. I am the Director of Communications for the Delaware Division of Small Business. And we want to just, first off, wish everybody a very happy Small Business Week 2021. Every year we try to take the opportunity to recognize all of the hard work that our state's small businesses do every single day. And there is no denying how hard that work is, especially in, over the past year. And also take the opportunity to hopefully help you guys grow your business. Of course, that's really the most important thing. We're really lucky that we can now have so many businesses kind of turning their attention toward the future, and hopefully doing so optimistically. And so with that in mind, we have today's presentation on equity crowdfunding. What is that, and how can you use it to help your business grow? So we're going to get into the specifics of what that is. You may have in the past heard about platforms. Probably the most common one that people have heard of is something called Kickstarter. You may have heard of GoFundMe. These are not what we're talking about. They're just a good basis for kind of getting a sense of where we're headed with this. So if you're familiar with those, turning to equity crowdfunding, you're looking at platforms like Local Stake, Fundable, EquityNet, and perhaps most importantly for today's discussion, one called WeFunder. And we are lucky enough to be joined by part of the WeFunder team. Adi is a British-born, West African-raised entrepreneur, started working in venture capital in Senegal, which is pretty cool, and founded and then exited, or co-founded, I think, and then exited an ag tech company. So maybe talk a little bit, maybe get him to share a little bit about that. And then began working for WeFunder in 2019. So he's gonna, basically, we're gonna start really big picture on this, discussing what equity crowdfunding is, how you can utilize it, if it's a good fit for your business, all of those different kinds of things. And then we'll get into some also the specifics of the WeFunder platform, which is one of the most heavily used platforms for doing this kind of thing. I obviously mentioned there are other ones, but we're lucky enough to have Adi here with us to talk about this. We'll give him a chance to talk about his company's platform, and like I said, how you can utilize it, how it can be beneficial, or I think also equally important, maybe how to know that, okay, maybe my business isn't quite there yet. This isn't something for me, but it's good for me to put it into the back of my mind and have as an option for later. So last thing before we jump into this, and I have Adi turn on his screen. And we're just going to kind of do this as a Q&A. Me and him, we're going to chat, and we're going to ask everybody to put your questions as you have them into the Q&A in Zoom. And we have our staff monitoring the Q&A, and they're going to pass good questions over to me, and then we will get them to Adi and have him answer it. So without further ado, I'm also going to tilt down my screen. Perfect. There we go. So Adi, if you wouldn't mind, I hopefully gave you a minor introduction, but if you wouldn't mind sharing a little bit more and giving us a sense of let's just put it bluntly, why people should listen to you on how you can help them to understand this.
Definitely. So as Michael said, I'm Adi Akufa-Apple, proud British-born West African-raised American. I head up WeFunder's community partnership program, as well as being an EIR for the Urban League. In a previous life, I've had few startups, 2 learning points, 1 exit, And as you know, today's session, we're going to be definitely discussing equity crowdfunding. So I can just do a quick brief on that. Equity crowdfunding or regulation crowdfunding was created and passed in 2012, but took effect in May 2016 to provide the general public a community when investing in an organization. I don't feel a sense of meaning when I buy a share of Amazon, but I'm happy with its returns. Don't get me wrong. But small businesses and startups, if I can support those I believe in since their beginning, that's real value to us, and beyond returns, right? Because at that point in time, you're going to possibly be seeing a larger exit or a larger return on your investment. So that is the core of what Reg CF is about. It's about voting with your $100 on the future you want to see built, whether it's a local coffee shop or aerospace program. It's about believing in founders with crazy ideas, and WeFunders definitely help the community leaders revitalize their main streets, as well as founders create around 15,000 jobs, to be exact, 15,721 all over the U.S., bringing beer, bowel bun, and jobs to cities across the United States. So that's pretty much what WeFunder is. You can kind of see we are almost a platform between Kickstarter for investing, right? So it's allowing your friends, families, and customers and supporters locally to invest into your company in order to see it grow, and actually having a piece of it rather than just a product at the end of the day.
Okay, so Addie, tell us about, I read a statistic that said there are millions of small businesses in the country, and only a few thousand that have ever actually taken advantage of this as an option. So for everybody, who got maybe some marketing from us and said, I have absolutely no idea what that is, why hadn't they heard of it? Why is this so, new to the world?
Yeah, definitely. I think one of the biggest ones is that it just came around in 2016, right? Beforehand, when it was passed in 2012, it was still going towards a Regulation B aspect, and then it just switched over in May 2016. And I would say some parts of it is that Regulation CF platforms haven't done too much marketing on our end, reaching out to small businesses. I think the majority of it was always focused on startups, which were higher growth to some individuals, and most of the investors looking to come in were looking at focusing on those high tech companies. However, as we've seen, it's that most small businesses are the ones who actually have a lot more value in terms of customer appreciation. And I think it's going to be a statement that investor, all right? So individuals who would actually become your customers, at the same time, they would love to invest into your organization to keep it there and to keep it growing, right? So as individuals, let's say, for me, I don't have hair, but let's go ahead and say the barber, like the place I usually go to, right? I want to see them grow, and he's always telling me about how he wants to scale and open up a different location. And I want to see that happen. And I know there's a bunch of people in that shop that also want to see it happen and scaling and growing that. So I would go ahead and invest into his company, say, hey, look, I would actually like a piece of equity in your company. And at the end of the day, if it's profitable, dividends will be associated with it. But I'm perfectly happy giving you this amount of money if you're not able to receive a loan from a bank, all right? Or if you want to do a revenue share program, which a lot of small businesses usually do, it's based on your revenue, you pay me back, and I don't own any ownership of your organization whatsoever. So there's many different ways to do this, right? And that's something I think WeFunder looking to change. Like first, we were always in a space where we were mostly going for companies that were doing convertible notes or safe notes, but now we're kind of gearing towards small businesses looking to do revenue share programs where it's, hey, look, I'll give you the funding, upfront. From there, in terms of your community also looking to invest in you. By the end of the day, instead of it having ownership, it's based on your revenue that you're making. And if you're not making revenue, of course, there's no payback. But if you are making revenue, we can all benefit from this. And then at one point in time, if you pay back the multiple, then it's good for the organization and the investors as well.
So basically what you're saying is that what happens here is you purchase stock effectively.
Effectively.
Is that a good model for people to think about this?
Oh yeah, I agree. That's definitely a good model when it goes towards the having your customers become true investors and stakeholders in your organization. That's the model of purchasing stock. However, there's also different options where it's more or less a loan possibility, right? Where it's almost like a bank. However, it's a lower interest associated with it, and it's based upon your revenue versus it being a fixed rate, where you have to pay even if you're not making revenue. So there's just definitely two options where it's equity into the organization or it is a revenue aspect to it as well.
And you talk a little bit more about that. I think that people can pretty clearly and easily understand, for example, with Kickstarter, how, okay, I want to create a thing. And if I create that thing, if I get enough money to create that thing, and you gave me some money, then, here are your tiers, and I will give you that thing.
Yeah.
Here's a really great, one of the best examples is there was a little chip, and God help me now, I can't remember the name of what it's called, but a little chip that goes on like your keys, and it would help you use your iPhone to find your keys. And if you put in $15, you got me. Say again. Tile. Yes, Tile. That's it. Tile's a great example. Raised a ton of money via Kickstarter and that kind of thing. But that's not, obviously, that's not what's happening here. It's not, you give me money and I'll give you free haircuts, right? So talk a little bit more about helping people understand what they're giving up and what their people are getting to invest, and then kind of vice versa, what they get out of this, and what the investors hopefully give up.
Definitely. So for the Tile example, let's say, right? Tile did a great campaign on Kickstarter. I was able to raise the funding that's needed to help them prove revenue. However, they still need an injection of cash to actually operate the company, right? So for most Kickstarter campaigns, it's going directly into the product and not really going towards the actual operations of the company. So Tile needs outside funding from those individuals that already want the product to now have ownership of the company. So not only do they get the products in terms of Tile doing a Kickstarter, but if they were to go on WeFunder, now you have ownership of the organization. So as the company grows, you have stock in this organization that one day, if it is to IPO or get acquired, you get a larger payback, right? So for Kickstarter, it's buying a product and that's helping the company grow revenue. However, for WeFunder, or Regulation CF, it's buying equity into the company and stock in the company before it IPOs and one day is traded on the NASDAQ at a higher valuation. So you're actually, in the long term, you're purchasing a organization at a hopefully lower price point that one day, like let's say 5 years from now when it gets acquired, it is hitting a possible 20x multiple in terms of your investment. So I think that's one of the biggest parts about it. For a company in itself, seeing this, it's very helpful because one, you're turning customers that are already buying your product into investors. And then from there, you're able to possibly have these individuals become advocates and evangelists of your product and telling everyone about it. Because one, they've already invested in your company, so they want to see returns associated with it. And now you're building an army of people that are just out there saying, hey, have you tried this product? You should definitely test it out, like check it out, and sending them over to your company in order to actually raise revenue as well. So it's very, for companies, it's very rewarding at the end of the day, just due to the fact that now you're building a army of individuals and marketers that you don't have to pay for. So that's always fantastic.
Yeah, I think again, in doing some of the background research here, there's a really great article kind of explaining how Oculus VR, which is something people are probably familiar with as a virtual reality headset, and that it had done a Kickstarter, and so people who invested, who gave money to it, got a great T-shirt. And then when they sold the company for $1.2 billion, whatever the number was, to Facebook, those people got absolutely nothing. They had their T-shirt. That was kind of it. And so there's a really, there's this nice additional element if you are potentially that kind of level of company. But as you were saying, this also works really nicely for just your regular, downtown restaurant, barbershop, brewery, things like that. Exactly. So let's talk about how somebody can get invested, and get started with this, how a business can do this. And I have a question here that says, so something to address. Is there a fee to start with WeFunder? Do you take any fees? So let's talk also a little bit about the model here. What do businesses need to know as they get started?
Definitely. So for business coming on our platform, it's absolutely free in terms of like setting up your campaign. and then also going live absolutely free. It's when you actually look to take out the funding, that's when WeFunder would charge. Usually for most companies coming on our platform, it's about 7.5% of whatever they raise, just due to the fact that we also put it in front of our network. We do all the legal paperwork on the back end. If it's like one of the already the already terms that we already have on our platform, such as like a convertible revenue share, safe note. If it's already on there, we'll go ahead and process everything for you. And we basically put it into one package as well, and also do all the legal paperwork in terms of something called a SPV, which is a special purpose vehicle that is created so that everyone that's investing in your company at this point in time on your cap table, which is usually an organization's books as to who owns what in the organization, it shows up as one line versus having thousands of people on your cap table. And I think there was always a problem or a stigma about it in the past where crowdfunding used to have that, that notion to it, where it's like, hey, you're actually gonna have 1,000 people on your cap table. However, now with these SPVs, it brings everyone into one line of your cap table. And so it's very beneficial for like later stage investors just to see, okay, yeah, we can go ahead and buy this one group out and just do one simple check, or it's also cleaner at the end of the day if you're looking to IPO. But going back to the fees, so usually it would be around 7.5% associated with your raise on WeFunder, and that comes in after you take out the funding. It's never done throughout the whole process, and there's no upfront charge at all to the founder. You can even cancel your campaign halfway through your campaign, and we'll just go ahead and refund everyone the money that they invested at no cost to you. And in terms of additional fees for setting up a campaign, there are external fees that usually would occur, right? So if you want to do any marketing on the outside to reach out to your local network, that's always a fee associated with it. If you're looking to raise more than 107K, or 250K. So there's two notices. If you're a company that just recently filed your incorporation papers, you can only raise up to 107K in a given year, unless you go ahead and get your financials reviewed by independent CPA. Once your financials have been reviewed by independent CPA, you can raise up to $5 million in a given year. However, one of the biggest things for me is if you're a new company, don't overvaluate yourself. Don't say, hey, look, I just incorporated, I'm worth 10 million, I want to raise 5. Like, that's not gonna happen, right? So usually it's like making sure that you plan it correctly, where it's, okay, we'll raise 107K at a possibly 2 million evaluation, get some metrics coming in, and in that same year, you can go ahead and actually raise the remaining of the 5 million that you would like, right? So you can definitely do it in increments, but it's always good to show metrics associated with your company before continually raising. And then if you're a company that's been around for a year or more, you can raise up to 250,000. And once you hit that mark, if you would like to raise more, you have to go ahead and see an independent CPA to get your financials reviewed. Usually for reviewed financials, you're looking at anywhere between 750 to 1,800 for a year of reviewed financials. And most of the time, you only need 1 year or 2 years associated with how long your company has been around.
Okay, so you just threw out a lot of numbers and a lot of words, and we have people who are on here who I'm sure understand a concept like a cap table, and people who don't. So let's maybe back up, and I'm not going to ask you to explain all that, but if somebody's interested and it's like, yeah, this sounds fascinating, but I don't know what I don't know. Are there resources from WeFunder? Are there people who, outside of that they should reach out to, connect with? I think we're going to provide contact info for you maybe at the end of this, but what do you recommend for somebody who's just like, this is all just going whoosh, whoosh, whoosh?
Definitely. All right. So the first one is like reach out to your division of small business services. There we go. That's one plugin. And another one is that WeFunder will also, I can go ahead and send over an FAQ associated with all parts dealing with a founder on our WeFunder website. And then from there, you can always reach out to us personally through support@WeFunder and ask us any questions. I'll also give my email. I think I'll send over my email as well, so that if you guys have any questions you'd like to ask, we can always set up a 30-minute call just to discuss any questions you have.
I've got a question here from our Q&A. It says, well, I'll kind of broaden the question out a little bit. Does this work for nonprofits? And if so, how? Is that an option?
So we have worked with a few nonprofits in the past. However, it was always tied to something that was profitable, or for profit. It was an organization in Seattle that ended up purchasing a building that they would then use for apartment building, but for lower income residents. And so they were paying back their investors through this platform by having it tied actually back to the apartment building. So yes, they invested into the apartment building together, and it was operated by the nonprofit, and the nonprofit would pay back its investors in that property through the revenue share model. So, sorry, go ahead.
Oh, no, please finish.
So as long as your organization has a arm to it that can bring in funding, it's perfectly fine to run a campaign on WeFunder for your nonprofit.
Okay, this is a great question coming out of the Q&A. I think just a really smart question. Do people need to be accredited investors? And I think that's really what is so cool about this model, and what really spoke to me when I first learned about it. I was like, we got to get people knowing about this. So that's the first question. And I think secondly, and this is also right in there with it, is there normally a minimum that a person needs to invest and a maximum? So talk to us a little bit about those questions.
Definitely. So WeFunder we're open to everyone, right? So we allow individuals who are accredited investors to invest alongside your company, and unaccredited investors, individuals making less than $250K per year, to also invest into your organization. So we're just basically the platform that allows both parties to come together and invest into your organization. And then from there, we'll do all the legal paperwork to make sure that it's actually an investment into your company through the SPV I spoke about earlier. In terms of a minimum investment on our platform is $100. So as long as anyone has $100 to invest in your company, they can also invest into it alongside an accredited investor who may be looking at closer to like $10,000 and up. We do have limitations as to how much you should invest in a given year, and that's tied back to your salary and your overall net worth. So as long as, I think right now we're doing 10% of your overall salary or net worth, whichever one's higher, that's what you can go ahead and invest in a given year. Because we want to make sure that you are being safe associated with your investment. And so we do have a calculator system that when you're being onboarded onto our platform, asks those 2 questions. And then from there, we limit it so that you're only able to invest that amount in a given year. And you can always update it as well.
I think this is an important distinction really between the accredited investor question, talking about like angel investors, and how this really differs from that, and kind of expanded the opportunity beyond people who are of high net worth, who could maybe put money into something. Though I will mention, just as a little plug for the Division of Small Business, that if you do know people who are high net worth and are looking to do angel investing, Delaware has the Angel Investor Tax Credit, which is a significant benefit to anybody who invests in a company in that way. So if you're interested in that, please visit our website, delbiz.com, for more information. If you're a company or looking to do investing that way, or if you happen to be a high net worth person and want to do it either way. So either way, we're going to get our own plugs into. Follow up quickly to the fee question from a little bit ago. The 7.5%, is that taken as just cash, or is that taken as equity in the company? How does that work?
So WeFunder is all about cash associated with this, right? So for us, we want to build a community, and we don't want to have equity in your organization whilst you're still looking to grow. So it's all tied back to the founder and the community that they're building in terms of the investors coming in, the investors. So WeFunder only takes it in terms of a transaction, and then from there we also help your company grow. Once you're an alumni of WeFunder, we look to connect you over to other business leaders or any individuals that have been in your field before, just to help mentor you in order to grow, just as a benefit or a value add to our investor base, right? We want to make sure that your company keeps growing so that one day it can either get acquired or IPO, in order to actually pay back the investors that invested in you in the beginning.
I'm going to throw out this question. I think it's going to maybe hit directly home with you. Are the possibilities for utilizing this only within the United States, or can you also work? It looks like they're asking about West Africa specifically, which is why I thought you might be interested. But let's just talk about that in a broad sense. Is this America only, or can this be? Can you get involved? I think for most people, this question probably is a lot about the investing side. But can they be, investing in something in Europe or in Africa or in Asia or something like that?
Definitely. So we do have a lot of companies that are outside the US go on our platform. However, they had to be incorporated within the US. So some of these organizations went through accelerator programs, or they just incorporated and have a few individuals that are based in the US. And so they're allowed to raise as long as they have a portion of their operations within the US. So it could be like the banking system associated with it, some marketing, but they are allowed to raise as long as they have been incorporated within the US and have at least 1 or 2 employees in the US or a division in the US.
Because this is a law, this exists because of a law within the United States.
Exactly it. Exactly it. And in terms of investors, we are open to all investors throughout, the world, except for any place that the U.S. is currently warring with. Or at the same time, I think, unfortunately, individuals in Alberta, Toronto, and Ontario and Quebec cannot invest on the WeFunder platform at this time due to their regulations.
Are there qualifications to get onto the WeFunder platform? I think they're asking as a business.
As a business, sure can. As a business, no. So the qualifications are, as long as your organization is looking to raise funding and you already have a community of folks looking to invest in you, it's perfectly fine. WeFunder is industry and stage agnostic, right? So we basically allow anyone and everyone to raise capital. We've had individuals with napkin ideas raise crazy amounts. We've also had individuals who, in terms of prestige, they've worked for a lot of organizations for a very long time and they have that industry knowledge and they've come and raised as well. So in terms of the stage you need to be in for your organization to raise, you can basically raise at any point in time. As long as you've already built up a plan around how you look to target your investors, you can basically go on WeFunder and do just that.
I want to be clear, that Addie's here from WeFunder, and it's a great place for us to be getting this expertise from because it's one of the real big players in this space. There are other players who do have qualifications for their platforms. So just something to think about, that WeFunder may be the best platform for what you want to do, or one of these other platforms may be the best platform for what you want to do because you're doing something so specific and targeted in their realm. And there were a couple of other ones that I didn't put onto the list.
I can definitely
at the front that my understanding is they, some of them take you do have to apply and they take 1% of applicants. So there's this really high threshold that people have to reach. Can you talk to us a little bit about that?
Definitely. So like we were saying, so WeFunder is more like Kickstarter, where anyone can go ahead and apply. And basically, as long as the network is looking to invest in you, you'll do well. And then there's companies like Republic, also absolutely great. I think you should definitely check it out if you're looking at overall market of platforms. Definitely have to do your homework associated with each one. Republic is more focused on you apply. During the application, you may get in. You have a couple of interview processes. It's a longer due diligence process. But once you do get in, it will be a upfront amount of funding that you have to put in, possibly between 5 to 10K associated with onboarding processes and then filing the paperwork for you. And after that, you may have to pay for marketing as well associated with the platform. So WeFunder does marketing in terms of once you hit a different milestone, we'll go ahead and start doing more marketing for you for free because it gets pulled back from the 7.5% we take out. Other platforms do an upfront charge associated with marketing. So you just have to look into that and see exactly where you'd like to fit in terms of a platform. I would say that Republic is really good when it's focused on real estate, anything with gaming and cryptocurrency, as well as they've started targeting more organizations that are also CPG based. So it's looking at the platform, looking at all the different platforms and seeing which one best fits your industry and how well they've operated within them. And then from there, I think that's who you should actually apply to and speak with, or you can apply to all of them and then see whichever one comes first, right? So
Fair enough. Cast a
whichever
wide
one.
net.
Exactly.
I'm going to combine a couple of questions here from the Q&A. So we have one person saying we're starting a new truck stop travel center in Delaware. Do you work with that kind of industry? Do you ever work with brick and mortar businesses that aren't unique but are successful at a small level and want to expand? This person says they're a small hotel owner. And I combine those questions because I think based on what you've been saying, the answer is just broadly, yeah, of course we work with
Yeah.
them.
Yeah, exactly. Yeah, like we work with literally a lot of different businesses. I think the only ones we don't work with are the ones that our banks are limited on. So it's like cryptocurrency. Currently, we currently don't work with that. Anything that's in the space of um, so anything in the space of like a brothel or anything like that, of course, we don't work with. And then from there, uh, we don't work with anything dealing with commodities either. So like gold or oil or anything like that. But if it's nothing of in that kind of situation, we're perfectly fine to work with them.
Actually maybe brings up just a out of curiosity question, because here in Delaware, we're currently in our state legislature having a discussion around legalized marijuana. Is that because, when you say brothel, maybe you're
Yeah,
edging into that area as well.
yeah,
Is what does that look like for WeFunder?
definitely. So currently our banks, WeFunder is always happy for it, right? Like we've tried to work around it. We work with companies that are dealing with more of the management side of it, or dealing with the the management side, or like a SaaS-based platform associated with cannabis. However, like currently our bank will not allow us to touch anything dealing with cannabis. However, I think with the federal changes, that is also going to change. So we just have to wait them out during this time. But we do work with CBD-based businesses. We work with companies that are vertically associated with cannabis, but currently we can't work with organizations that are more hands-on in terms of the actual processing of marijuana at this point in time.
Ask a couple of questions, maybe just about investing more broadly, and businesses considering this. So from our Q&A, when should you take investors on if you're a new biz? And what contracts should be in play before taking them on? Should a lawyer be involved? And let's really, obviously, we can answer that question in a completely different and very lengthy webinar, but let's talk about it for this kind of investing. Does somebody need to have a lawyer looking at this? And are there contracts that need to be worried about? And how you mentioned back of napkin stuff, but how early is too early?
Okay. So with the first question, in terms of the lawyer, I always say always seek out legal counsel associated with anything dealing with bringing on investors, just to make sure that the contract that you are signing to bring on these investors is at the end of the day safe for you as the owner of the organization. So that's something to always look into. In terms of the platform in itself, we also vet every single contract that comes through us through our lawyers to make sure that one, the individuals, as in the investors, are also safe, as well as the founders, making sure that, at the end of the day, we don't want any bad press associated with WeFunder. So we make sure contract wise, like it's set and it's prime. Dealing with, sorry, your last question.
I think the last question was just about timing. Like what is too early? I think probably less about what's too late, but like what's too early?
Yeah, I would say what's too early is, I'd say no incorporation. Like you haven't been incorporated, they'll go on WeFunder, right? Because usually if a company's been incorporated, they've thought through the process, they know exactly what their business model is, and that's why they're coming onto the page on the platform to raise funding. So I'd say you're too early if you don't have your company incorporated just yet.
Excuse me. It's a good question. Do you need to be incorporated? There are obviously lots of different, business structures, C Corp and S Corp and sole proprietor, but you're going to be effectively giving people stock in your company. So does that mean you need to be incorporated to do this?
Yes, you have to be incorporated to raise funding on a Regulation CF platform. Just due to the fact that we are overseen by FINRA and the SEC. So we have to make sure that it's legally binding and that you actually are giving up ownership of an organization that is, incorporated within the US in order for them to pay taxes.
So another just investing question, and again, I'm not going to ask you to, again, I think you could easily do another hour-long thing on this, but just for a second, how should people be thinking about it? How do you realistically value your company for investors? And is there a resource maybe that you recommend for saying, because this is an important part. If I have a barbershop and I want to expand, and somebody gives me $100 to do that, well, how much of my company did they just buy? I have maybe no idea. So what do you recommend for people trying to grapple with that question?
Definitely. I would say in general for most organizations, if you are post revenue, right? So if you are making revenue, I would look at my year before's revenue, especially if it's a small business, and possibly do it at a 4x to 5x multiple. And that's just coming from like general thoughts here. It's usually 4 to 5x in terms of the the valuation of the organization, right? So, and possibly the next 4 to 5 years, your company's going to keep growing at the way it is, and so at that point in time, your company may be valued at this amount. For software-based businesses, it's always good to reach out to other individuals, like other angel investors, to say, hey, look, how can I, my organization currently is pre-revenue at this point in time. I'm not really sure in terms of what my valuation should be. And most of the time, you'll see most angel investors are usually telling companies to range themselves around 1.5 to 2 million in terms of a software based organization, just due to the fact that they usually scale up at a 7x multiple. During the next raise, it's hey, you raise 500,000. Most likely, if you're a software-based organization, since it's easy to print out software, right? Your valuation may grow, and so you're supposed to be looking at a larger multiple. However, it's still going to come back to one, speaking with your mentors, speaking with individuals that are who have been in your field before, or reaching out to your local. Again, I think one of the biggest ones is reaching out to your division of small businesses and asking them, hey, look, currently I would like to raise. Can you kind of connect me to anyone that's possibly done this before, and see exactly how I should value my organization at this point in time in order to successfully raise. And I think that's one of the biggest things, is always kind of getting enough individuals who know what they've raised before, and saying, okay, how should I value my company at this point in time in order to successfully raise? Like, unfortunately, WeFunder cannot do that. We cannot put a value on your company, otherwise we would get in trouble. So
yeah. It is 12:37, and we're not going to wrap up. We still have some great questions in the Q&A, but I do want to tell everyone, obviously, maybe the second thing that small business owners have that is most important to them after money is time. So we're not going to take up too much more of your time. Really appreciate everybody hopping on here. So let's see if we can just knock out a couple of these other questions and then kind of go to some wrap up. Is there a minimum maximum time that investors need to get paid back?
no, there's not. So usually most investors are looking at possibly a 5-year exit at some point in time for an organization. However, if it's like a small business, and they know that it's mostly there to stay there, it's not looking to expand, it's just looking to possibly just raise funding in order to purchase out new product or something like that, or new equipment, then they know for a fact that in terms of a payback, it may be a little bit less, maybe like a 24-month to 48-month payback. But for most organizations who are looking to scale and grow, it may be about a 4 to 5 year period.
Do you, as the company, have to source your own investors, or does WeFunder do the sourcing for you? And I think this is a great question, because it also really speaks to how companies can utilize like what the platform element of this is from you guys, or from Kickstarter, or anything else like that. So talk to us a little bit about that.
Definitely. So I'd say there's 3 of them, right? There's 3. So the first one is your community and your network, right? So usually for WeFunder, we look to tap into your community and network first, just to generate enough investment volume coming in to showcase to our investor base. So the way we do this is, if a company is looking to raise upwards of, let's say, on average, the 200,000, right? 250,000 if it's been around for a year. The first 50,000 may come from its close net, like individual's close network, right? Friends, family, customers coming in for that initial 50,000. From there, WeFunder goes ahead and files the Form C for them, which is the document that allows them to publicly solicit funding on our end, right? So currently, before that, everything was a reservation into the organization saying, yeah, if you guys were to hit 50,000, I want to have a reservation in your company of this amount to invest. Once it hits that, it converts over to an investment. And then from there, we send it out to our entire network. So we send it out to all 957,000 people on our network saying, hey, this company's looking to raise. Here's the breakdown and the metrics associated with the company. Like, check out their page. So we send it out on Thursday evening. And by Monday morning, we have about a 35% click through to the website, to these organizations' pages. So that's a huge benefit there. Once the company crosses 100K of investment volume, WeFunder goes ahead and starts paying for digital ad spend. So we go ahead and put a small budget behind digital ad spend to reach out to individuals that are not a part of our network, not a part of your network. However, individuals that may be interested in your industry. And so that's the biggest thing here, right? And that's at the 100K mark, and then at the 200K mark as well. However, something that we're newly incorporating is bringing alongside media partners for this. So what we do is, once you've hit about 50K of investment volume and you may be a little bit more stagnant during that time, we'll go ahead and send it out to media partners that are interested in your specific industry or in your specific town, or let's say, like, in Maine or anywhere in Delaware. And then from there, they'll go ahead and basically shoot this out to their network, their user base, their viewers, and that can also help generate investment volume to your campaign. We just recently did one with an organization that was it was stagnant at around the 350K mark for the past like 2 weeks. And so we sent it out to an organization partner just to see how it would operate. And within 6 days of that, they raised an extra 107K on the platform. So that's where we see that the real value is when we actually start targeting media partners outside of it. It actually would generate more individuals to actually invest into your campaign. So.
Got it. We have a quick follow-up on your valuation comment of the 4x multiple. They just want to know, you're talking gross sales or profit. You said revenue, I believe.
Yeah. So sales.
Okay. So sales, not profit. To do a valuation on that. Now, and I'll handle just one question. I had mentioned the T-shirt for the investment that was Oculus VR. So the person asking this question, not offering any ownership stake. Yes, for something like Kickstarter, you can be a sole proprietor. So that is a big difference here, because we're talking about offering investing and equity in a company. You're going to need to, as you noted, Addie, you're going to need to be you're going to need to be incorporated versus other setups where you may not need to be. Is that fair?
Yeah, it's fair.
Okay. All right. So, and just the person who put this in the chat, no problem that you were late. We are recording this, so we'll put it up on the Division of Small Business Facebook page later today, and that way, even if you know someone else who was like, oh, I think they would have enjoyed this and they would have gotten something out of it, you can let them know that we'll have it up there. So question here is, how long or short should a campaign be?
Definitely. So for most campaigns, we see about a 30-day to 90-day window associated with the campaign. So depending on their marketing ability, our network also looking to really double down on this investment. We usually see a campaign closing out between the 30 and 90-day period.
The question here is, can I use WeFunder at any stage? And they have some specifics about kind of where their business is, but I distinctly recall you saying you're stage and industry agnostic. Is that accurate?
That's correct.
Okay, so the answer is any stage. You could be at any stage and doing this. Okay, so I think I'm just going to scroll up and make sure I've hit all of the questions that were asked. Yeah, I think we're good. So I want to just kind of head to some wrap up questions, and then let you talk a little bit more specifically for a minute about WeFunder and kind of make that pitch for using your platform. Do you have any examples of like this worked? Like if you are trying to find a template for how to do this, and maybe if you can talk a little bit about from those different areas. So if somebody on the Zoom is is looking at is working on software and could be in those significant growth, or if they're the downtown brewery. So have you seen, and do you have a company that just immediately comes to mind? It's like, follow what they did. They did a great job.
Definitely. I would say the first company that comes to mind in terms of a downtown brewery, it would be Modern Times. Modern Times killed it. Let's say, yeah, I think they raised a full million plus within, let's say, 2 days, right? So how they did this was getting everyone in there. It was a brewery, right? So getting everyone that came in saying, "Hey, we're actually gonna be raising in a couple days. Like, check us out. Like, let's sign up for an email. Like, you walk through the doors. Like, you put in your information. We'll send it out so that on the day we'll send it out to you, and you'll just go ahead and invest." Right? They got their community involved, and they made sure to work with the press so that it's like, "Hey, on this day, shoot this out to everyone who's a part of this area, telling them that we're going to be raising, and they can invest for $100 into our organization and own a piece of it." So that was possibly one of the best campaigns I've seen for a brewery. Like, just coming on top of mind. Another one for a for a retail location was Seneca Lake, Seneca Lake Outfitters, I believe. So it was a small mom and pop roadside, like a roadside store where basically you can just go in and purchase a few different goods that were made all like around the Seneca Lake. And so they ended up raising, I believe, 160,000 from their community and individuals who have just gone to that store before. So they already had an email list of people who have been there. They were always a part of the community. Like, they had a board in there that people would just put pictures on. And so they just retargeted towards their community. And then from there reached out again to like their local newspapers to showcase it and share it out. And then they also had a news station do an article about them, or news station do a segment about them, about why they were raising, and that was definitely helpful. If you're going for more or less the software side of things, what you can really look to tap into is reaching out to accredited investors, if you've already spoken with accredited investors and they're like, "Oh, well, our typical check size is this amount. I don't think you're there just yet." This is an easy way for them to come in for less, right? So most investors will probably be like, "Yeah, I'll throw you $1,000, but I'm not going to throw you 50K because I may not want your organization currently right now, but I want to keep track of it," right? And so this is a way for them to keep track of your organization with just putting in a little amount. So if you do happen to actually scale up in the future, they got in still at this price point, and then they can go ahead and actually put in more funding from their own organizations. Also, targeting individuals that may want to utilize your technology. That's one of the biggest things. That's one of the things that Kickstarter does really well. And so if in terms of marketing, you should also look at Kickstarter campaigns as to how they're able to target individuals that want their product, and then utilize that same kind of mentality associated with it for crowdfunding, right? Because at the end of the day, people want your product or want to see you bring this to light. And so if you have an organization that's still like pre-revenue, however, it has a product, targeting it to your ideal customer to then be able to invest in your company, right? So they want the product out there, and now they're like, "Yeah, I'll invest into your organization in order to see the product come to light," right? And it's almost the same thing Kickstarter is, where it's like, "Oh yeah, I'll invest into this so I can have the product now." However, for them, it's, I want to see it come to light. And possibly one thing we're looking to incorporate right now within our platform is that once a company raises, we would love to go ahead and share it out with our entire network. So what we do is like at a discount. So if the company's like, "Yeah, I want to give 20% to all WeFunder investors on the platform if they would like to utilize our product," right there is proven revenue, right? So like, in terms of revenue, it's going to jump up right away. Plus, you've already received money for your investment, so it definitely benefits the founder at the end of the day. So there's many ways that we're looking to actually bring this all together.
Okay, so let's start. We're gonna wrap it up. It looks like we have a bunch of people are obviously asking for contact information. If you wouldn't mind putting that into the chat, we'll do it that way rather than another way, because I think that way people just take a quick look at it, they can grab it before they head out for the day. And let's wrap up with just kind of give you the floor and
Definitely.
share what you want to share about WeFunder or anything else.
Definitely. I'd say in terms of fundraising, WeFunder is one of the best out there in the market, right? We've helped companies raise about 268 million to date, and that's starting since 2016. And they've gone on to raise 5 billion outside of us, right? Well, our largest being a company called Zenefits that was dealing with payroll. However, another portion of this is always do your homework associated with crowdfunding and anything in general, right? Make sure that the organization you're going with, one, has had great exits in the industry you're looking to actually promote, and at the same time, just do your due diligence on each of the platforms to make sure it's the best fit for you at the end of the day. For us at WeFunder, I think one of the biggest things, especially working with the division of small businesses here, is that we would like to provide everyone that's looking to possibly raise from Delaware a discount associated with utilizing our platform, right? And so that's something I can definitely send over. In terms of that, it's like I think we're reducing it down to 5% associated with the fee WeFunder. At the same time, for us, it's any investments that are over 25K. So if you have a investor that's already looking to invest at least 25K in your company, we'll go ahead and waive the fee associated with that investment for both you and the investor. So that's almost a free investment according to you, but we'll do all the paperwork on behalf of you, just so that individuals who are coming on the platform see those large check sizes, and it's much easier in terms of benefiting you and the investor, as well as our community at the end of the day. So that's something I just want to kind of put out there. But I think for closing notes is we would love to speak with anyone that's looking to possibly raise funding, even if it's not with us. We would love to just kind of help out in terms of giving you example profiles to look through, or any of the documents that can help you in terms of a feasibility study before raising, as well as a launch guide and fundraising guide that you can look through just to help you, like, no matter what decision you make.
All right. Well, thank you so much. I can see, I don't know if you're looking in the chat, but there are a lot of people who really seem to have enjoyed this and gotten a lot out of it. So I'm really glad that we were able to have you join us and share all of this information. For anybody who is also interested, sorry, the WeFunder website is just wefunder.com, correct? We just got that in the chat. Okay, and your email address, just again, we have somebody who has asked, is just Adie, ADIE, at wefunder.com. And then last thing, we do have another Zoom webinar for Small Business Week tomorrow that we'd love to see everybody who is here today on tomorrow. And I think if you found this one useful, you're going to find tomorrow's useful as well. We have 3 investors from a group called Robinhood Ventures. It's an angel investor fund in the region, and they are going to be here to talk about how to make a great pitch. So, that is something that, regardless of how you're doing it, whether it's you and 3 people in a boardroom or it's you on the WeFunder platform, what do you need to do to convince people to see the value in your business and get them to put money in? So that is, again, that's also at noon, and you can find the link on our Facebook page. And we'll also be sending out an email tomorrow morning just with a reminder. So again, Adie, thank you so much. I hope everyone else enjoyed this as much as we did. And again, if you want to have a review of it, we will have it up on our Facebook page and Twitter a little bit later today. So thanks again, everybody. Have a wonderful day. Bye-bye.